Welcome. I'm Catherine Magana here with a special guest. We have Pam Morton with us. We're going to talk about Medicare planning with her today. We also have Rachel Ivanovich and Greg Carroll, and we're going to give you a market update, a little bit about tax planning, and also focus today's conversation on Medicare planning and some updates and things to think about. So here we are. Today is April 9th, and woo, it's been quite the week. So obviously there's, yesterday in particular, the markets are up pretty aggressively up, which was great, and kind of looking at where we're at year to date. As of yesterday's close, so yesterday was April 8th, the Dow Jones year to date was down 0.32, which is pretty much flat. And if you throw in today's up market, we're probably going to be pretty much even for the year if we stay where we're at for today's numbers. The NASDAQ was down year to date about 2.61, but that's been a huge shift over since the last few days. The S&P 500 year to date is down 0.92, but after today, pretty much will be down slightly or flat as well. And the Russell 2000 year to date is up about 5.58, so that's actually in the green year to date. But for the most part, we've seen a huge shift in the last week. Happy to see us getting a little more even and also in the green in some different sectors. So obviously that was some big news, and I think obviously with the U.S. and Iran agreeing to a 2-week ceasefire obviously helped the markets overnight. Looking at where we're at with the Fed and any rate changes, so right now it looks like as of this morning, there's a 98% chance of no change with a 1.6% chance of a rate hike. And then the probability of a rate cut this year has changed a little bit. And so now we're looking at a one cut this year, and that's the probability is about 28%. So once again, that's still up for debate, and that could change at any moment, but that's what we're looking at now. And then I was looking at mortgage rates. So mortgage rates as of this morning they're at 6.44% for their 30-year and 5.81 on the 15-year, and that was from the Wall Street Journal. So those have come down slightly over the last few weeks. So obviously, like I said, we kind of made some headway with the markets recovering a little bit, and looking at kind of the one-year CD rates and treasuries right now. The one-year CD hasn't changed, so we're at about 3.9%, which is where we were at last week. Treasuries for 1 year have come down slightly. We're at about 3.75 right now. And then the 10-year yield for right now for treasuries is 4.28%. So obviously a lot's happened in the last week. I'm happy to report some positive news finally.
Yeah, it's kind of interesting that you say. I mean, this year's been pretty wacky, and with the Iranian deal, that the markets are within 1% of all-time high. Well, 1% this year, but still a couple of percent off an all-time high. And if you would have told someone, 6 months ago that all this was going to be going on over there, and oil's at $100 a barrel, you would think the market's going to be having a little bit more difficult time. So I just wanted to bring up, the price of oil. That came down because of this truce that I think lasted actually a couple hours before there was bombs flying over there, and the strait is now closed. I think 2 Iranian ships got through the other day because they're Iranian ships. So, but the price of oil on the market shows about $100. It's actually being sold for closer to $140, $150 a barrel right now. Wow. If you need the oil, that's what it's going for. The futures market, the spot market is totally different. So, but just to give people an understanding of what a barrel of oil produces, about half of a barrel, 42-gallon barrel, produces about 19 gallons of gas. Yeah. The other half creates everything else we do in our daily lives, about 6,000 products. So you can see how important oil still is in the world economy. I mean, it creates a lot of things. So having the strait shut down every day makes it a little bit more difficult, and to unwind that. And I think we talked about it last week. Vince thought that, he said, well, once it's over, they can load these ships up and go. Well, there's been a lot of damage done. Iran has, damaged refineries in the UAE, Saudi Arabia, Bahrain, Kuwait, Iraq. So there's going to be months and months, and some places, in some instances, like with the LNG, they destroyed a facility that produces almost 20% of the LNG in the world, and that's 3 to 5 years to fix that. So we do need to hopefully, if Trump has the patience to deal with what's going on over there right now, I personally don't think this truce is going to last through the weekend.
I was going to say the Strait of Hormuz was important to get that open, and I was
Right.
reading there's 800 ships stuck in the
Yeah.
Persian Gulf right now.
I don't see Trump lasting more than another day or two if they don't open that up.
Yeah.
That's my feeling.
Well, then obviously the markets will change a little bit.
Exactly.
So to be determined.
To be
next
continued.
week. But let's just stick with we're flat or in the
Let's
green.
talk about fun things like taxes and Medicare.
There
Really?
you go.
Yeah.
It's my turn.
I think it's fun.
Well, there's 7 more days in tax season, and I think that one of the biggest things for right now for taxpayers is to be looking at not only have you filed your return, but do you need to make a payment for 2026? And so as investors, it's important to remember that even if you are reinvesting income, reinvesting dividends or capital gains, then that you do have to pay tax on that. And I've been surprised that so many people had looked at the return and said, I never knew I had to pay tax on it's being reinvested. I didn't take it. So making sure that you're looking at your investment income for the first quarter and making a payment. One of the strategies, if you haven't paid or filed your return yet for 2025, is estimate what you think that your extension payment will be for 2025. And I did this with a client yesterday, and we came up with the number, and then we estimated what the first quarter estimate was going to be, and then we tacked those together. So they're going to make the payment for both 2025 extension and 2026 quarterly in one, and then you just roll the pay. I know, ouch, it was a big number. And we rolled it forward. So it's just one way to do that. So if you haven't done your taxes yet, you still have time. Extending is not a big deal as long as you make your payment by April 15th. And if you're getting a refund, it's no big deal at all. It's just making sure that you file that extension and file before October 15th.
And who's counting, right?
7 days.
Just Rachel.
Right, 6.5.
I know.
Oh, and all the CPAs out there.
Yes.
So next week, is that the 15th?
Wednesday.
It is.
Or Wednesday.
Yeah.
So
Yeah.
you'll be... Actually, you might
off.
not even be here, huh?
I'm not coming in Thursday. Yeah, so
There you go.
well, maybe I'll come in to record.
Oh, there you go. Okay, so we want to welcome Pam Morton from Benefits by Design, and she is a returning guest with us today. Pam has over 20 years of experience in the health industry world, has dealt with a lot of clients over the years, and also is a specialist in Medicare planning. And so we're really happy to have her here with us today. So welcome.
Thank you.
And so we thought we'd kind of kick off, and maybe you want to share maybe some updates or things that are happening in the Medicare world.
Okay. Well, I think one thing that people are noticing is that rates are going up, even if you have a Medicare plan, health plan, and some of the reasons for that are that we are still coming off of COVID when there was a lot of delayed care, and then also just the increase in prescription drug costs is huge. For a while, we were saying it was medications that were going from name brand to generic, but now it's just in general. It's kind of like the good news and the bad news. The good news is that there's lots of new medications to help people with different things. The bad news is that they all cost a lot of money. So that's some of the reasons. And then just some of your regular inflationary type issues that are coming up. So I'm seeing much larger increases, or I did from open enrollment last year, and then now as people are getting their Medicare supplement bills that are from their birthday.
So we have some clients that we work with. We do financial planning, and usually when someone's about to turn 65, they're, maybe 64, 64 and a half, and, we are having these conversations. And so what are kind of some things or considerations they should be looking at when working with you or reaching out to you, and when should they reach out to you?
Great question. Everyone has kind of a different situation. If you are already retired, you're already taking Social Security, then Medicare is going to be automatic for you. And so you'll just get a card in the mail. You're ready to go. But if that's not your case, if you're still working, if you are still getting your health care from someplace else other than Medicare, then it requires a bit more planning. And so it's a good idea to start thinking about it a few years out, just like you would planning for your financial future. So you need to figure out which category you belong in. Are you working for a large employer and you're age 65? You're going to continue on the group plan, so you'll be able to delay your Medicare planning for a while. But if you're planning to retire anytime after age 65, just finding out ahead of time, what are my options? Am I going to have to pay anything extra for any increased income amount? Just find out what category you're in. And then when you're talking about actual rates of how much you'll pay for things, that's more of a later conversation, closer to the time that you're actually getting Medicare. But you could start thinking about it a few years in advance and deciding or just figuring out kind of where do I fall and then how much in advance do I need to plan, and then how is that going to impact my budget financially as well.
So if somebody is working, do you evaluate then should they go on Medicare versus their their company plan? So is that what you look at typically if you're still employed?
If you're still working past age 65 for an employer with 20 or more employees, then you'll just stay on your group plan. And so you really don't have to think too much about that. You just continue business as usual. You just want to make sure that you have credible coverage, especially on your Medicare Part D drug plan side. So typically an employer plan will have a great drug plan, and so that's not a concern. But if you're working for a smaller employer, then that could be a concern. So that's definitely one of the things you want to think about. And then after that, really, it's just starting to learn about the different ways that you'll be receiving your supplemental coverage to go along with Medicare.
So let's talk a little bit about Medicare costs. Like, what are some things that we should be thinking about? Or, obviously we've talked about IRMA a little bit in the past. Maybe you can educate and share a little bit about that as well.
Mm-hmm. Well, IRMA stands for Income Related
Monthly Adjustment Amount.
Monthly Adjustment Amount.
Like
Thank
Rachel
you.
knows that.
Yes, you do. And so if your modified adjusted gross income is for a couple, let's say less than $218,000, or for a single $109,000, you'll pay the regular amount, which this year for 2026 is $202.90. But it's a graduated scale beyond that point. So, if, for instance, if you have an income that's greater than $342,000 as a couple or $171,000 as an individual, then your Medicare adjusted amount might be $527 a month. And this is calculated by Social Security, and they do a 2-year look back.
A lookbook.
And so you'll have to add that to whatever you're going to be paying for your Medicare health insurance at that point. You really want to think about how much will I pay to Medicare, for Medicare A and B, how much will I pay for either a supplemental or Medicare Advantage plan, and then how does your Medicare drug plan figure into that as well.
So you really want to start thinking about this when you're 63, as far as 62 even, so that you kind of understand what your income is going to be, because it's a 2-year look back. So even before you start thinking about Medicare, you got to think about this IRMA adjustment.
And it's a huge shock often, because it isn't that it phases out. It's like you hit that number, and if you're $1 over,
$1.
it's the next charge. So you need to be really careful with that. And I have a lot of clients who get upset about it, and they come in.
Yeah, it's not like the tax rates that are graduated. This is
just, you hit that number, then you're in the next one.
Wow.
Yeah. And I guess from a financial planning perspective, what we look at is potentially if somebody is not working, and then we're looking at partial Roth conversions, and we have to look at, okay, if they are going to go into the Medicare system, and they're going to, what are we doing to make sure, do we need to stay within certain levels with them, or are they going to go, past and have to pay more later?
Well, and sometimes it makes more sense to pay the higher Medicare premiums for a couple of years, but you have to do the numbers and actually look at tax planning. What does it look like if my required minimum distributions after I'm 73 will be that much more, and I'm going to be paying that much more in taxes? The tax savings, you have to weigh those factors to see what makes more sense. Maybe you're paying a little bit higher in Medicare premiums for a couple of years to save this much more in taxes later.
Correct. So you have to, like I said, look at the numbers and look at the detail to see.
No simple math.
I mean, we had a client who actually came in and we were looking at this for her, and she was looking at if she did Roth conversions and converted all of her IRAs, which is a big number, over the next 5 years, the amount that she's going to be paying in Medicare premiums was, I don't know, additional $20,000, but the taxes that she was going to save was going to be like $100,000, and so
Over her lifespan then?
well,
Okay.
and of course we had to. There's a bet of how long is she actually going to live,
Right.
But at the same time we gambled, and she said let's do the conversions.
You kind of look at the break-even age and,
Well, and how old
family history.
family
and-
history, how old
yeah.
were both of her parents lived into their 90s and so
Right.
on and so forth. So it just made sense to pull the trigger and do it.
Yeah.
And then another thing that comes up occasionally is if a client retires and they're on the, they say, okay, what about the look back? But then obviously there's now a change of income, and so there's things that potentially you can consider. So
Yes, well, there's a form that you can file with the IRS to ask them to take a look at your income, and that is Form SSA 44. And the clients that I've worked with have been pretty successful about getting that amount adjusted. So the idea is that you were working, you were making this amount of money, but now you're not working, or you're not, you don't still have that employment anymore, and so your income has really changed. And that's a really easy form, very available. Just pull that off the internet.
And it's for life events as well. If you get married or divorced, or let's say you sell a property and now you're not getting that income from that property anymore. So there are certain different events that will qualify you for this. It's a waiver from
Seems like a
from
lot
the
of people
surcharge.
would need that form.
Yes.
Because if you're retired now, you don't have your income, or if you sold some property, it seems like that would be pretty common.
Very common.
Yeah.
So we talked a little bit about those that are phasing into retirement or looking at Medicare a couple years in advance. But what about those that are maybe 5 or 10 years away? Is this, obviously we can use the numbers, today's numbers, and then do some inflation. If you're just kind of looking at it from a financial planning perspective, if there's anything else we should be considering or looking at or thinking about because sometimes I feel like the people don't think about Medicare until they're 64 or they're reaching out, but the reality is you really should be thinking about this 5 or 10 years before.
And so I think getting started a few years ahead of time and just figuring out kind of which category you're in and then what to anticipate and then estimate what your costs are for Medicare will be really good. But when you were saying that, it was also making me think about a lot of the phone calls I get from my clients for people who would like to retire, and they're younger than 65. They might be between 55 and 60 or 62, and what they don't realize is that they may have to pay a lot of money for an individual health plan when they leave their employer. So yes, COBRA lasts a couple of years, but after that, it's a significant amount of money, and so planning for that as part of the bigger picture is a really good idea as well.
True. So once again, if you retire before 65 and you have those gap years, you definitely need the medical coverage still. And I just know medical insurance, even here with the business, it's so expensive, and just it blows me away how much we spend in medical cost and healthcare costs.
I think I have a lot of conversations with people, clients and just friends and family. They always talk about Social Security when they should take it, and they don't think about this medical aspect. If you retire before 65, you got to figure out how you're going to pay for your medical expenses. So they always want to start it early because they think it's going to run out, which may or may not be the case, Social Security, but no one talks about insurance.
Yeah.
Very rarely.
Oh, no, and I think it's important, and it can cost a lot of money if you don't do it the right way. And so what else would a person need to know that's transitioning into Medicare? What are some other things that we should be thinking about?
Well, I think thinking about the enrollment periods, as basic as that sounds, which Medicare enrollment period will you fall into, category will you fall into? Because if you're turning 65, then you'll have an initial enrollment period, or if you're retiring. But if you don't, then you continue working or you continue to have health insurance, then you're going to fall into a special enrollment period. And so understanding what a special enrollment period is and kind of the mechanisms behind that is helpful to make sure that you will actually qualify for that. You don't want to miss your initial enrollment period or your special enrollment period because then you have to enroll during a general enrollment period. And some people think, well, I'll just self-insure, it's no problem. But actually, it could be a timing issue for you as well, because the general enrollment period is every year between January 1st and the end of March. And so if you neglect to sign up for Medicare when you're eligible, and then you sign up during that time period, then your Medicare doesn't become effective until July 1st of that year.
Oh, interesting.
So you
Okay.
could really end up with a long period of time in which you are essentially self-insuring for your health insurance if you're no longer covered by your whatever you had previously.
And so I'm sorry, can you clarify the special enrollment period then? What is that again? So that's separate from the initial enrollment?
Yes, the special enrollment period is, just grab my notes here a little second here. So it is, if you're age 65 or older and you have active employer group health coverage, and it's triggered when either of these things happens, either you retire, stop working, or you lose your employer health coverage, then you have 8 months to enroll in Medicare Part B and Medicare Part A if you're not already enrolled. And so that 8-month window is considered your special enrollment period.
Got it. Okay. And then what about, I know there's Medicare, but can you talk a little bit maybe about what supplements are and maybe some of the other costs that people maybe want in different programs? And I don't have to go into detail, but maybe more in general.
Just in general, you really have two options to pursue once you are getting Medicare and you're deciding how to supplement the Medicare, because Medicare doesn't cover everything. It's not 100%.
And I was going to say, make a comment that the one thing it doesn't cover, which I think clients need, is dental work. I was like, it just blows me away that clients really need, people need dental work, and this isn't part of this, and it's crazy.
Dental is not included unless you have a Medicare Advantage plan.
Oh, there you go. Okay.
However, this is a conversation I have so frequently with my clients, because you want to find out if it's really a value of you to have dental insurance or not. And I always start the conversation by saying it's probably not a value. But there are some situations in which it is a value. So if you know just from your history, your lifelong dental history, if you tend to have a lot of dental work, you have some crowns, root canals, et cetera, coming up, then you might want to think about getting dental insurance, because then essentially you're getting 50% paid for by the dental plan, up to a certain amount, depending on how much the dental plan pays.
And so if, I kind of interrupted you earlier about the supplemental and some of the other kind of programs, so those obviously are more cost involved that some clients potentially look at. Is that correct?
Yes. So you really have two different, options to go with. The first one is a Medicare supplement plan, and there's standardized Medicare supplement plans. They've been around forever. They're actually legislated by Congress, and they're all the same. So if you have a Plan F or a Plan G, it's the same whether you have it from Blue Shield or Health Net or whatever company you're buying it from. So benefits themselves are exactly the same. Really, the only difference in cost is going to be if they offer something special like dental. They could offer dental or vision. Vision's more common. Actually, the supplements don't cover dental, but they cover vision and some other things. And then think about the customer service that you would have, or the how and trust maybe the company you're thinking about going with. That's important. And the cost for a Medicare Advantage plan can range, or a Medicare supplement plan can range anywhere from, as a person who's turning 65, between $150 and $250 a month. When you're younger, it's lower, and then it gets higher as you get older. Contrasting that to your other option, which is a Medicare Advantage plan, which could have a 0 monthly premium, but has trade-offs in that you can't go to any doctor you want to. You really need to go to the doctor in their network. So.
Got it. Okay. Interesting. And so obviously you have a lot of knowledge about Medicare planning, and so at this point, want to kind of know what's a good way for our clients to reach out to you, or I don't know if you have an email or phone number, or what's a great way for us to get you connected with some of our clients that have questions about Medicare planning for themselves.
I love it when they send me an email. My email address is pam@benefitsbydesignca.com. And if you could just shoot me a quick email and just tell me, how you'd like to get some help, or what you're looking for, then I can start to customize a plan for you.
Great.
Options for you.
Well, thank you. We know you are a wealth of knowledge, and this is obviously something a conversation that comes up a lot, and we absolutely love having you here today as a resource for us. And we know you're passionate about helping clients and are very knowledgeable in this area, so thank you for being a part of this today. And unless there's anything else anybody else would like to cover, I think we covered a lot of ground today. And so thank you for joining us today, and until next time, happy investing.
Please stay tuned for important disclosures. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional. WWM Financial is a registered investment advisor with the SEC.